Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you all to another promising edition of the Forex Morning Mastery, which happens to be our midweek review where we come together to review how well the asset we are monitoring so far this week has been doing, and of course prepare ourselves for the second half of the week. So I'm very excited to have you guys around with me this morning. Well, so far this week we have been monitoring about three financial instruments, of course, which includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them all, the XAUUSD, popularly known as the gold spot. Though the week has been fair enough for us, on Monday we did very well across the assets, though we had some struggle on the USOILSPOT, and of course yesterday wasn't really rosy at all, as the market was choppy, and as a result of this we saw the price did not move as expected, as it keeps running around our entry zone, leading to some couple of stop losses yesterday, which we are going to be looking at and see how we intend to capitalize on more opportunities today. And today being Wednesday, is the midweek, and of course I'm beginning to see some beautiful setup evolve across the chart, which I think will be giving us some interesting opportunities to recoup the losses we had during the course of the week, and of course make some more money on top of it. So I encourage you all to stay tuned in, grab your favorite beverages, coffee, tea, whatever it is, and stay tuned in so you don't miss out on the valuable ideas I have to share with you this morning, as I have done a comprehensive analysis on all of these assets, and I'm very excited to share them with you as we navigate the market structure during the London and the New York session. Now, for those of you who are joining us for the first time, I'm very excited to have you guys around with me this morning, and I do know you will be wondering, what is it that we do here on the Forex Morning Mastery? Well, the Forex Morning Mastery was a platform that was an idea that came up to do follow-up details on the weekend videos I usually share. So on Mondays, Wednesdays, and Fridays, we come together here as technical traders to do follow-ups and reviews of our current positions in preparation of both the London and New York session. Now, it's important for you to note that this is not a signal service platform, but instead we are here to understand the current market dynamics, and of course I do know that the variety of traders who are in this community span across day trading, scalping, swing trading, positional trading, and the like. So what we simply do here is to come together to understand the market structure and see where and how we can capitalize on buying and selling opportunities based on the current market structure we are seeing. Besides this, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually will help you in enhancing your own trading decisions and strategies. So once again, I welcome you in board and encourage you to actively engage in the comment section. So with that being said here, let's dive right into the business. In fact, we have a lot to talk about today, and I'm so excited to share them with you. And first of all, the first thing we usually do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And as a result of checking the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing, so that we can strategically position ourselves for the next move. It can happen prior to the event, during the event, or even after the event. Now, right on the economic calendar here, based on the assets we are monitoring so far this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. However, on days when we do not have any high impactful event, we take it a step further to include mid-tier economic features so that we can have a broader view into what majority in the market will be looking at, and of course will be guiding their trading decisions for that particular day. Now, so far this week we've had a bunch of impactful event, not high impactful event yet. We had a bunch of events so far this week, which has been a little bit of influence on the sentiment in the market. Now, on Monday we had a bunch of speeches from Fed officials, from Barkin to Williams, and then we also had the BRC like-for-like retail sales data, which came in on Monday from the United Kingdom, and of course that data did not do very well at all, as we saw the actual data coming in at a deficit of 4.4%, which is way below market expectations at 1.6%, and this actually resulted into a negative deviation of 9.32. Now, what does this simply tells us? It tells us that the retail sector in the United Kingdom isn't doing very well at the moment, and of course this has rubbed off on the GBPUSD. As you will see, in recent time, price has gradually been edging towards the downside. We are going to be looking at that in a moment. Then yesterday we also had a speech from Kashkari, who is also a Fed official. In fact, so far this week, the summary from the Fed official statement is more hawkish in that regard. Now, one of the things they've mentioned so far is that the likelihood of interest rate cut is not possible at this point in time, despite the lower than expected US job data that we saw last week Friday. Remember, the US NFP came in lower than expected at about 170,000, which is way low beyond market expectation, and of course the average hourly earnings also came in below expectations, which gives us an insight into how the labor sector is struggling at this point in time. Though there was traction, they grew by 170,000, and of course it's also a good sign that the monetary policy of the Federal Reserve is gradually having an effect on the job sector, which will dovetail to reduce in inflationary pressure in the United States. However, one of the things they mentioned is that it will not be reasonable at this point in time to reduce interest rate just because of the data we saw on last week Friday. So they still need more data to really show that inflation is gradually thinning out. So we will be looking out for the CPI data, which will be coming up next week, to give us an insight into the inflationary pressure of the United States. And of course, this has resulted in some indecision in the market, as majority of the key players in the market may likely want to look forward to the US CPI data next week before making aggressive bets. So as a result of this, we have seen the market go through a range bound structure, which we are going to be looking at in a moment. Now, today, Wednesday, May 5th, we have 3 events. There are no high impactful events today, so we have 3 events, which are all speeches from Fed officials. Now, the speeches will be everyone will be looking forward to the speeches. Let's see what time it is. So we are going to be looking at the first one coming in about 6 hours from now, and that's Fed's Jefferson Phillip is the Federal Reserve Vice President, and of course whatever he says today will be carrying a lot of weight. Then we also have about 45 minutes after that, the Federal Reserve Bank of Boston President Susan Collins will also be speaking today. And then finally, about 2.5 hours after Collins' speech, we are going to be looking at Federal Reserve Governor Lisa Cook, who is also going to be giving a speech today. Now, for those of us who are new with this idea of looking at the economic calendar, what is the significance of the speeches today? What are the things that the how does the speeches influence the sentiment in the market? Well, most importantly, the speeches from these Fed officials will be providing us with an insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. And you know, we are in an era where everyone is leaning towards a potential interest rate cut maybe later in the third quarter of this financial year or the final quarter of this financial year. And though we have been thinking that interest rate will be cut early as possible, but due to the CPI data, the inflationary data we're receiving from the United States, and of course the resilient nature of the US economy hasn't allowed that, as any idea of keeping interest rate, cutting interest rate, has been pushed further to the back. So everyone will be looking forward to this event to hear what they will be saying, and of course it will be influencing the dynamic in the US dollar market. So these are the impactful events we are going to be looking forward to, all of which are coming in from the United States. However, I would like to touch on what will be happening tomorrow, which obviously will be influencing the sentiment in the market today as well, and that is from the United Kingdom. We have a bunch of high impactful events from the United Kingdom, but I will be focusing on the interest rate decisions from the United Kingdom, and of course the Bank of England's Governor Andrew Bailey's speech, which will also be coming immediately after the interest rate decision is announced. Now, this is one high impactful event everyone is looking forward to, and considering the fact that we are looking at the GBPUSD, it's very important that we take the interest rate decision coming up tomorrow, and of course the speech from the from the Bank of England's governor into consideration while we review the current market structure, as it is very, very likely in the GBPUSD market that major participants in the market step aside, waiting for this major event to happen, see the outcome before making any aggressive bet. So we are going to be taking that into consideration as well while we look at the GBPUSD market. So this is what we are going to be looking at for today. I do hope you have the timing marked out appropriately, as gradually towards the event we usually see some interesting setups that will guide our decisions today. So as always, we will be diving right back into the chart, where we shall be looking out for patterns and structures that will be guiding our decisions today. Now, as usual, the first asset we are going to be looking at today is going to be the USOILSPOT, and so far we have a sell position which was triggered earlier today, and in fact it's running with about how many pips in profit right now? About 65 pips in profit. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten my commentary on this asset, as I did mention that it's important for us to move all stop losses. Let's secure this position right now, as anything could happen as we look forward to some major event coming up today. Now, before we go into the details here, let's quickly talk about what really happened at the beginning of the week and what has led to the current situation we have here. Now, before I go into the details, it's important for me to emphasize here that we will only be deliberating on the 1 hour time frame, which is our execution time frame. So on Monday, we already done a top-down analysis on this asset right from the higher time frame, having an holistic perspective into what the market is saying. And if you missed out on that session, I encourage you to watch that session to have a background knowledge of how we got to this point. The links are right in the description box of this current video you are watching. So with that being said, let's dive into the business. Now, on Monday, the market started on a bullish note, as we all saw here. We saw price started at around the $77.80 level. Remember, we saw this whole situation happen here, and remember, prior to the bullish momentum we saw at the beginning of the week, we had this interesting setup, which is looking more like a flag pattern, if you would ask me. And let me highlight it out so you can see we saw this impulsive leg to the downside. Then we saw price action transition into what is looking like a descending channel following that impulsive bearish leg. Now, another thing we also acknowledge within this range bound structure is the fact that you will see how price was testing the support line of the descending channel, and at the beginning of the week price action did not come even close to the support line, giving us a sign that buyers may likely be gaining some momentum. So as a result of this, we were actually looking out for bullish potentials, hoping that we have a reversal setup that will push price maybe into the golden zone before the bearish momentum continues. Now, the first thing we noticed here at the beginning of the week was price starting around the $77.80 level. Then it climbed into the $78.35 area where we saw some rejection, hereby giving us a range bound structure, which gave us an insight into the prevailing uncertainty at the beginning of the week. And you know how we use our range bound structures in this community. When price action falls into a range, there is an indecision going on, so we all want to exercise patience and wait for the market to finally make a decision, which obviously will come in the form of either a breakdown of the support line to give us selling opportunities, or the breakout of the resistance line to give us buying opportunities. And of course, we did had price breakout of the resistance line multiple times this week, giving us a bullish traction. And of course, we did join. I did mention we move our stop losses accordingly. We got taken out with a small size of profit. Then later on, we had another buy position triggered, but unfortunately it did not do very well as price action dropped to the downside. And I did update us yesterday, and of course, remember, we were looking out for the selling opportunity below the $77.80 area, and after price broke down, took us out of the buy position in the loss, we had a sell position which was triggered at the $77.80 area, giving us 65 pips in profit at this point in time. So I encourage us all to move your stop losses. For those who capitalize on this opportunity, well done and kudos to you. Now, in preparation for today's New York and London session, how do we intend to capitalize on any trading opportunities on this particular asset? Well, we need to understand some key market drivers which will be influencing the sentiment in this particular market. Now, I've pulled out some major market drivers which I would like to share with you this morning. Hold on a second, please. So for the crude oil market, we have I was able to bring out three major highlights, drivers that will be influencing this market today. Now, one of the major highlights is the supply, what's it called here, the supply disruption in Middle East, and of course the recent drop in oil prices reflects reduced concerns in the Middle East. The Israel-Gaza situation was looking as if there is going to be some resolution until the Israeli rejected the deal that was proposed by the Egyptian government, and of course the Saudis government as well, and this attributed to investors pricing out the risk of wider conflict in the region. However, the truth is, in the conflict has eased tension, but the repricing of oil risk premium is still looking shaky at this point in time, as we are yet to come into a conclusion on that. Then another factor that is going to be influencing the sentiment in the market for the later part of this week was this recent development yesterday, where it was announced that Saudi Arabia has raised its official selling price for crude oil in Asia for the month of June. Now, this is a very good signal for buyers of US oil, because for the Saudi government to increase the official pricing, what does this simply mean? It means that there is high demand in the market, hence they have to increase prices to meet up with this. Now, this is a very positive signal, and it could incite some bullish expectations in the market. So we are not going to ignore the potentials that buyers may likely come into this market. Then another thing here is the focus on crude oil inventory data. As we all know, marketers will be closely monitoring the US crude oil stockpile data. Today we are looking forward to the EIA report. Then the Energy International Agency reports are going to be producing the report for last week. Everyone is looking forward to what the actual stockpile accumulated for the previous week is. But however, considering recent reports from Reuters and the likes, market expectation anticipates a decrease in the weekly measure of the change in the number of barrels in stock for crude oil and its derivatives. So this is another signal that we may likely see some positive traction in favor of the US oil spots today. Now, with this data we have here, let's see how the market are likely going to react to this data, and this will reflect on the chart as price action. Now, going back into the chart, let's look at what is really going on around this point. Now, in fact, to help us have better clarity into this, I would like us to run through the higher time frame, that is the 4 hours time frame, to look at what we saw at the beginning of the week. Now, if you look at what is going on here, though the strength of the momentum to the downside is strong at this point, but you will see on the higher time frame that price action is gradually approaching a critical juncture in the market at that psychological $77 area. Now, if we go left and look at what has happened around that area in the past, let's go just to as far as the beginning of this year. You will see how that area had played a major role in negating all attempt by the sellers to break through that particular area. Now, look at what happened here at the beginning of the year. We have a choppy market condition around this area, and following that, we saw that during the month of February, this area has been serving as a strong demand zone. Now, when price drops into that area, we see buyers push price to the upside. So it simply means that market participants deem the $77 area as cheap enough to buy the US oil spots. And considering the geopolitical tensions in the Middle East, the expectation that crude oil stockpile is going to drop for last week, the idea is, are we going to see buy pressure resume from this area today, or will price drop down and signal a strong sell-off to the downside? So we are at a very crucial juncture in this market, the $77 area, where depending on how market participants react to the structure today will determine how we will be trading. So our center of focus for today will be around the $77 area. So let's see how the market is going to play around this area. Now, scaling back down into the 1 hour time frame, please, for those of us who had capitalized on this bearish opportunity, let's kindly move all our stop losses, secure the position right now as we wait to see how the market will react to the structure. Now, let's talk about the potentials of sellers first of all. Now, considering the fact that the market has been bearish for the last couple of weeks, and we continue to see that bearish momentum persist since the beginning of the week, we have a descending trend line connecting the series of lower highs for this particular week, as you will see here. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we will continue to look out for patterns and structures that supports the idea of selling the asset. And the only condition that will make us buy is for price action to break and breach that descending trend line, except for rare cases where we see convincing setup that tells us that buyers may likely gain momentum anytime soon. So with this scenario here, I will continue to look out for more selling pressure if price action breaks down and retests the $77 area, hence we can join the bearish move to the downside. Now there are two ways to which we can capitalize on this opportunity. I've talked about this countless times in this community. Now for those of us who had capitalized on the profitable positions we have currently running at this point in time, you may afford to risk some of the profit you had made so far to test waters around the $77 area, so you have something to leverage on. And what I simply mean here is that you can place a sell stop order below that structure to join the bearish move to the downside. But if you are joining for the first time, you have nothing to leverage on, you would have to wait for confirmations before jumping into the sell positions, like a breakdown retest of structure to join that downtrend move. Of course, I will be giving us updates on both my TradingView and Telegram platform. Now, if the contrary happens and we begin to see buy pressure resume around this area, it could take about 3, 4, 5 hours before this whole situation happens, especially as we get close to the EIA report, which is coming up later today. Now, if this whole anticipation transitions into something like a double bottom structure around this area or any form of reversal pattern, we will mark out the neckline of the reversal pattern and then buy the breakout retest of the neckline, where we shall be looking out for more opportunities to buy if price action breaks out of that descending trend line. I will be giving you updates as at when due, when anything of such begins to evolve on the chart. Well, at this point in time, we have a bearish bias. We're yet to have any signs that buyers will take over the market anytime soon, but when that happens, we look out for reversal patterns to join the uptrend move, and that could take about 3 to 4 hours before it matures. So at this point, let's keep our sell bearish open. We look out for more selling opportunities below the $77 area, and if you have any questions as regards to what I just explained so far, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So you can also use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So see you soon in next 10-15 seconds. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. And I do hope you've marked out the structures as we have illustrated so far during the course of the session, as we will be needing them to guide our independent trading decisions. And thank you very much, guys, for supporting. Your likes are very valuable to me. Thank you very much. And for those of you who are yet to click on the like button, please do. This is the cheapest way you can support this community to grow, and thank you very much as you do so. So with that being said, here let's dive right into the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, pound sterling stroke the US dollar. And in fact, we had a stop loss on this asset yesterday. Price action hit our stop loss, though we had some buy positions at the beginning of the week, scooping in some modest size of profit. But unfortunately, yesterday we were taken out of the buy positions we entered again as a retest of structure. But at this point in time, good news, we were able to recoup the losses we incurred on that buy position as we took advantage. In fact, right now we have 3 sell positions running in profit at this point in time. So let's quickly run through what really happened at the beginning of the week that led to the situation we are right now. Now, I would like to re-emphasize that we are only going to be deliberating on the 1 hour time frame, which is our execution time frame. So if you do want to watch, have a background knowledge of how we got to this point, we did a top-down analysis on this asset on Monday. If you missed out on that session, please click on the link right in the description box below. You will be taken to that video and you can have an insight into how we got to this point. Now, with that being said, let's dive right into the business. Now, after identifying a simple trading setup on the 4 hours time frame, where we had this situation here where price action did break out of that descending trend line on Friday, I think. Was it on Friday? Yes, it was on Friday. We had a breakout of the structure. Price broke out, as we saw, retested the structure before it went into a consolidation phase during the first 12 hours of the week. And as a result of this consolidation and breakout of the descending trend line and the fact that price action was sitting above the key level we identified on the daily time frame around the 1.25250 level, we were of the opinion that price action may continue the uptrend move. And as a result of this, we were really positioning for an uptrend continuation structure. And what we saw here at the beginning of the week was a consolidation phase where price was confined within the 1.25575 level and the 1.25380 area to emphasize the prevailing uncertainty in the market at that point. And of course, you know how we treat our range bound structures in this community. As long as price remains within a range, we exercise patience, as we know that there is an indecision going on, waiting for market to finally make a decision, which will come either in the form of a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistant line to give us an opportunity to buy. Now, with a buy position triggered at the beginning of the week, we saw price went to as far as 39.40 pips before the sell bearish momentum came in. And I did mention during our live session on Monday that for those of us who missed out on that buy position, that we should exercise patience and wait and see if the market will come back to retest the 1.25 25575 area, which it did during the New York session on during the later part of the New York session on Monday. We had the buy position triggered, but unfortunately that position did not do very well, as we saw price drop to the downside, eating our stop losses, taking us out of that position in a loss. However, yesterday we had the privilege of joining a bearish move. Remember, I gave us an update yesterday that the only condition that will make us sell the GBPUSD was for price to break down the 1.25380 level, which happens to be the support line for the week. Remember, this was where price started the week, and that was where we found buy pressure. And if that level gets broken, then it gives us a sign that sellers may likely be taking over the market. We saw the breakdown of that structure, which lines up exactly with that ascending trend line we spotted on the higher time frame. Now, this gave us a sell opportunity. We joined the bearish move and then added one more at the breakdown of the 1.25250 area, giving us two sell positions as at the time I shared my commentary this morning. Now, after sharing my commentary, I added another level at the 1.24800 area, where I said we will be adding more sell positions to our existing trade. And of course, this level price action had already triggered it, so we have a minimum of 3 sell positions running in profit at this point in time. Let's quickly run through how many pips that is. The first one is running with about 65 pips. The second one here is running with about 50 pips in profit, while the third one is currently running with about 8 pips in profit. So we have over 100 pips in profit at this point in time after recording a loss. So we are able to recoup the loss we incurred yesterday and make some small profits on top of it. And for those of us who capitalize on this opportunity, well done and kudos to you. So at this point in time, price has moved significantly well in our favor. It is high time we secure our position, and what this simply means is moving our stop losses accordingly so that we do not get caught up in any sudden pullback that may take us out and of course eat into the profit we already made. So what are we doing right now? Let's kindly move all our stop losses accordingly, and I'm of the opinion that anywhere above the 1.249 and the 1.2500 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. So kindly move your stop losses at this juncture, so that area seems most appropriate to lock in this current sell position. Now, as we prepare for the New York and London session today, what are our chances on the GBPUSD? Are we going to continue selling this asset, or are we going to get ready for an uptrend move as market participants gradually anticipate the Bank of England interest rate decision coming up tomorrow? Well, I have highlighted some key drivers that will be influencing the sentiment in this market this week. Now, if you look at your screen right now, we have I think I have about 3 of them. The first one on the list here is the inflation outlook in the United Kingdom. Now, inflationary pressure in the United Kingdom is thinning out from what we see and from what the Bank of England governor said last week. He had a speech last week where he said inflation is gradually thinning out, which could incite the idea of interest rate cut anytime soon. And from the CPI data that came in March, we had 3.8%, which was lower than the previous month, which is a sign of progress that the monetary policy tightening process has been of immense effect. However, we'll still look forward to more data to buttress the fact that this inflation is gradually thinning out. So everyone is expecting that for the month of April, inflation would have dropped in the United Kingdom. Then another factor that's going to be influencing the sentiment in the market this week is the economic growth prospect, and that is the GDP data, which is coming up on Friday. So the UK economic is expected to expand by at least 0.8% for the month of April. That is the expectation, which is a good signal considering the fact that the United Kingdom economy has been contracting in the previous GDP reports that have been coming in. So we look forward to see what that will be. And then finally, the one that will be influencing the sentiment in the market this week is the monetary policy expectation. So this is where the interest rate decision, which is coming up tomorrow, is going to come into play. And of course, everyone is expecting that interest rate will be left unchanged. Now, with the situation we have here, what are the chances that the prices of pound sterling will drop or continue to the upside? Now, looking at the situation we have on the chart, let's go back into the chart. Let's see how the market is expecting to react to the anticipated event. So looking back into the chart right now, let's see what our expectations will be. Now, let's look at the 4 hours time frame quickly, please. Let's see what is going on there and how that area. Okay, beautiful. Now, for those of you who are with us during our live session on Monday, you will be familiar with the structure we have here. Now, price is back into that temporary demand zone we identified at the beginning of the week. Remember, we had an ascending channel on the 4 hours time frame. Let me show you quickly, after taking into consideration the character of price action in the last 2 to 3 weeks. We had the resistant line of the ascending channel after connecting the series of higher lows, and we have the support line of the ascending channel after connecting the series of higher lows. Now, what do we have right here? We have a temporary demand zone, hold on a second, between the 1.24750 and of course the 1.245. So this area has been a demand zone for about 2 to 3 weeks in this market. As you will see, every attempt by the sellers to break through the structure was met with strong resistance from the buyers. Now, will the same thing happen today? Will buyers gain momentum from this area again? Well, you can see we are at a very crucial juncture where, depending on how market participants react to the 1.24750 level, will decide if we are going to be joining a buying opportunity or a sell potential today. Now, going back into the 1 hour time frame, I just need us to see what things are looking like on the higher time frame. So like I said, on the higher time frame, we are at a very crucial juncture here. So for the next 3-4 hours, we want to see how the market is going to react to the zone. Are we going to have a double bottom structure, inverse head and shoulder pattern, or a falling wedge, giving us a reversal setup that will push price to the upside, being the fact that we are back into a demand zone? So that is what we are going to be looking out for here. How will price action break down the 1.24750 area to inside more selling opportunities? Of course, I will be giving us updates on both my TradingView and Telegram platform as we continue to monitor price action. So at this point in time, we maintain a bearish bias, and depending on how price reacts to this area in the next 2, 3, 4 hours will now determine if we will be adding more sell position or joining an uptrend move. But most importantly, let's ensure that we secure all the sell positions we have right now while we wait for new setups to develop on this chart. So this is my simple view on the GBPUSD for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next and final asset on our watch list for today. You can as well take that use that time to mark out the levels and structures we've identified on the chart, as they will be playing a major role in guiding our independent trading decisions for today. So stay tuned in, guys. And please, if you have found this content helpful and useful in making your independent trading decisions for today, kindly support the project by giving the video a thumbs up. Your likes are valuable to me, and of course it also helps the community to grow, as the algorithm tend to push the video to a wider audience of traders who may find the content beneficial to them. And thank you very much as you do so. So see you in about 10 to 15 seconds from now. Hello, Soldier Pete. Good morning to you. Glad to have you around with us this morning. I'm very excited that you found this content useful. I do hope you clicked on the like button already. Thank you very much as you do so. So, in the absence of no further questions, I'm of the opinion that we are all on the same page at this juncture. So, let's move on to the next and final asset on our watch list. I hope you've marked out these levels accordingly. Please do. They're going to be serving as a major role in playing a major role in guiding our decisions today. And please, the current sell positions we have right now, let's ensure we move our stop losses accordingly, as the market could change anytime. So please, let's do so immediately. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And so far this week, we've done fairly well this week. Remember, at the beginning of the week, we bought the XAUUSD, where we joined the momentum after the breakout of the 2,303, where price moved over 270 pips, and I think we had a couple of more buy positions before the bearish momentum came in. And throughout yesterday, we were not able to take one single trade on the XAUUSD, as the requirements to take trading opportunities did not evolve or mature on the chart. Now let's look at what has really happened since the beginning of the week and what led to the decisions we made. Now, if you in any way had missed out on our analysis, on our top-down analysis on the XAUUSD, check the links right in the description box below to find out on that. Now, at the beginning of the week, we saw here how price action broke out of the descending trend line we identified on the higher time frame. Remember, in the last couple of months, in the last 4 or 5 weeks, price action has been confined into a series of lower highs, giving us this beautiful descending trend line we identified on the higher time frame. So since price tested at all-time high, we've seen price action significantly drop to the downside, which could be as a result of a retracement move. Now, despite the series of lower highs we saw at the beginning of the week, we saw that sellers were unable to break through our keys level for the week, which is the 2,285 area and the $2,300 level. I think we will see this more clearly on the 4 hours time frame. Let me show you quickly so that we can all be on the same page. So this is it right here. Right on the 4 hours time frame, you will see that after price tested the all-time high, price action has been dropping to the downside, finding series of lower highs in that regard. And despite the series of lower highs, you will see that sellers were unable to break through that area around the 2,300 and the 2,285 area, giving us a beautiful demand zone to work with ahead of this week. Now, since price action is sitting above our demand zone, it doesn't make any sense for us to consider selling at this juncture. We only want to be buying above a demand zone. Of course, this is where buyers come in to take over the market when price comes to the downside. The only condition that will make us sell is for the demand zone to be breached and broken to the downside, giving us a significant confirmation to join a sell-off. Now that price action has been trading above the demand zone and of course broken out of the descending trend line at the beginning of the week, it was more of looking out for buying opportunities. And what we said, I shared a commentary yesterday morning that since we've got taken out of all the buy position, we want to wait and see price come back to retest the trend line, where the emergence of a reversal pattern like a double bottom structure, inverse head and shoulder pattern, or a falling wedge will be all we need to join an uptrend continuation. Now let's look at the 1 hour time frame quickly, and let's look at what we said on this asset yesterday. So after joining a bullish move and we got taken out with a reasonable amount of profits, remember we moved our stop losses accordingly. The last 24 hours has seen price action confined within the $2,320.50 level and the 2,310 area to emphasize the prevailing uncertainty in this particular market. And this may be due to the expectation of an easing cycle, which potentially has bolstered the price of gold as it becomes a much more affordable option for foreign buyers. Moreover, the ongoing demand for Asian market continues to provide support for the precious metal in the near term. Now, there is another thing that has been in play in the last 7 months. The Chinese government have continued to buy the gold asset. They've continued to increase their gold reserve. And last month, it was recorded that the Chinese government bought another set of 17,000 troy ounce of gold. And I think that it's not China alone that is buying the gold right now. Most of the BRIC nations are buying gold. Kazakhstan has been buying gold in the last 3-4 months. India has been buying gold. Russia has been buying gold. Most of the Euro-Asian countries have been buying gold. So for me, this is one of the reasons why gold has escalated in price. Now, the point here is, will price continue to drop, or are we going to see situations where price will continue to the upside? Now, in my commentary yesterday, after we saw this, we took advantage of this uptrend move. I said in my commentary that we shall wait for price to come back into retesting either the descending trend line that was broken or the 2,303, where we look out for reversal patterns before we jump into any position. And since yesterday, price is yet to come back into that area, as we are looking out for a reversal setup around this area before jumping into any position. So at this point, we are going to be looking forward to anything like a double bottom structure, head and shoulder pattern, or falling wedge, where we mark out the neckline of the pattern and then join the breakout retest of that particular pattern. So for me, I still think that the path of least resistance for gold is still looking to the upside. And in fact, I have a couple of market drivers which I already highlighted for gold, and I'm willing to share them with you so that you can also have an insight into what is really driving the sentiment in the market. Now, if we look at what is going on here, you will see that the market, we have the market sentiment and index performance, the lack of momentum in US indexes. If you're monitoring the DXY, you know that the market is consolidating at this point around the all-time weekly highs without any clear directional catalyst at this point. And these changes in market sentiment can really affect the the price of gold. We know how related the gold and the US dollar is, inversely proportionally, I mean. Now, another thing that could influence the market sentiment on gold is the Federal Reserve monetary policy outlook. And recently we saw remarks from the Federal Reserve Monopolies President Kashkari, who suggested that a cautious approach is needed towards interest rate adjustment, and his comments about the likelihood of interest rates staying on hold for an extended period of time, coupled with the need for multiple reading on easing inflation, to consider rate cuts. So from what we had so far from the Fed official speeches in the last couple of days is that they will still need more data to really confirm that inflation is dropping. And I think next week we are looking forward to the CPI data, which will further give us an insight into what is really going on in this particular market. So we look forward to see how that is going to play out. Then finally is the what's it called again, the US dollar demand and government bond yield. Now this is another major factor that is going to be influencing the sentiment in the market as well. Now currently the US Treasury government yield bond is not doing very well. I think it's down about 4.6% at this point in time, and we all know how related the US Treasury bond yield is to the US dollar. Now, if the US Treasury bond yield is not doing well, it's not a good sign for the US economy, hence the US dollar tends to drop. However, if the US Treasury bond yield rises, then the US dollar too rises, which of course will dovetail to selling of gold to buy the US dollar. So this is another major factor that may be influencing the sentiment in the market. Now, in a weak absence of major US macroeconomic data, the only major macroeconomic data we are looking forward to this week is coming up on Friday, and that's the consumer sentiment index. Now, not until then, what is going to be the driving factor? Well, these are the things we look out for, especially speeches from the Fed official. We have a couple of them coming today, so everyone will be looking forward to them for economic outlook and potential future monetary policy action. So at this point in time, I still have a strong feeling that the path of least resistance for gold is still looking bullish at this point. So we're still not considering selling yet until price action states otherwise. Now let's go back into the chart and let's see what is going on here. Hold on a second, please. All right, so looking at the chart right now, after considering the current market structure, like I said earlier, I will exercise patience at this juncture, waiting for a reversal setup to come up here. It may come in the form of a double bottom structure, or it could come in the form of a inverse head and shoulder pattern or falling wedge, giving us a very beautiful sign that buyers are gradually gaining momentum. And of course, we do want to be joining the breakout retest of the neckline of that reversal pattern. So there's nothing much to say here. Let's just exercise patience. It could take about 3, 4, 5 hours before this whole setup matures. So let's exercise patience, and of course I will be giving us updates as at when due on both my TradingView and Telegram platform on this one. Now, talking about selling potential in this market, well, the only condition that will make me sell the XAUUSD this week is for price action to drop back below the seller's territory. And for me, the seller's territory is right below this descending trend line we marked out on the 4 hours time frame. Please watch my video on the XAUUSD top down analysis to have a better perspective into how that trend line is. So the only condition that will make me sell is for price to break through, breach that descending trend line. Then if I see sudden pressure below that structure, I will be looking out for selling opportunity. But if that is not the case, we continue to maintain a bullish bias here. So like I said, real summary again, we are looking forward to price coming back to retest the structure, giving me a possible reversal pattern to join an uptrend move. Now that reminds me, What happens if price does not come into the structure and it continues to climb and find new highs? Well, we have a descending trend line here, which has supported a bearish momentum in the last 48 to 60 hours. You will see we have a descending trend line here. So if price does not drop into that descending trend line where we're looking out for reversal setup, then a breakout and retest of this descending trend line will be a beautiful opportunity to join the uptrend continuation. So this is my simple view on the XAUUSD for today, but trust me, I will always be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. And today we are going to be running the XAUUSD live monitoring window. It usually starts about 5 to 10 minutes into the New York session, so I look forward to seeing you guys. So we usually come there to monitor real-time price action on the XAUUSD, and it usually lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. So I look forward to seeing you guys right there. So if you have any questions whatsoever, feel free to let me know in the comment section. If you need clarifications, trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. Let's see if there are any questions, after which we will be rounding off on today's Forex Morning Mastery. And please do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decisions. Why not give the video a thumbs up? This is the cheapest way you can support this community to grow, and thank you very much as you do so. And for those of you who had already clicked on the like button, you guys are wonderful. Thank you very much. I really appreciate from the bottom of my heart. So see you in about 10-15 seconds from now. Stay tuned in, guys. All right. So in the absence of no questions, I think we have come to the end of today's Forex Morning Mastery session with me, Sharif Daramola, and it has been a wonderful moment with you guys. I really appreciate every single moment. I love the energy in the house. Thank you for your likes and support so far. I really do appreciate it. So today we were able to take on all the three financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course the my favorite asset amongst them all, which is the XAUUSD, popularly known as the gold spot. And of course we were able to identify simple trading setups using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. Now, for those of you who are joining us for the first time, I do hope you were able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing you all same time on Friday, our last edition for the week, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the last trading day of the week, which usually comes with some level of volatility, as market participants will be rounding up their trading activities ahead of the weekend. So you do not want to miss out on that one, as we will be strategically positioning ourselves for this event. So it's on this note, I want to wish us all the best of luck today. I see you, Adeni Babalola. Thank you very much. I'm yet to hear from you. Trust you are doing very well out there. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.